Hey everyone, normally as we approach the end of the year, I try to share some thoughts on what I see coming in the year ahead. And as I tried to do that this time, I honestly had more questions than answers. There's a tremendous amount of uncertainty surrounding national policy. Tariffs, immigration policy, budget proposals, and tax laws all face a somewhat uncertain outlook. And these policies will affect economic growth, international trade, job creation, inflation, and interest rates. So at the moment, it's very difficult to offer any significant insights on how the commercial real estate climate will evolve in 2025. But every week when I shoot this video, there's one line I repeat: keep your eyes on the horizon. So even though there's a lot of uncertainty about how things will play out in 2025, if you recalibrate your lens on a longer time span, say 5 years, some things become very apparent. And that's where I'll focus today, on the 3 major trends that will shape commercial real estate over the next 5 years. The first is demographics. In all the world, the US has one of the most favorable demographic outlooks of any country. The 75 million baby boomers are aging into retirement, but they're followed by the 73 million person millennial generation. And behind the millennials is the 70 million Gen Z population. And each of these age cohorts continue to drive demand for different types of commercial real estate. Baby boomers are bolstering the needs for medical office space and seniors housing, while millennials and Gen Z will continue to drive demand for both owner-occupied and rental housing. And all age groups will support the demand for retail and industrial space. So the long-term space demand drivers for virtually every type of commercial real estate are on a positive track and will be supported by positive demographics. The second major trend, and I recently did a video on the underlying drivers causing this, is an anticipated slowdown of construction. Essentially, the cost of construction, which is already elevated, will inhibit substantial supply additions over the next few years or longer. Key factors driving rising expenses include the high cost of debt capital, rising material costs, rising labor costs, rising land costs, and increased processing costs. Basically, the fees and expenses associated with getting the zoning dialed in, getting permits, completing the entitlement process, the legal costs, and so on. So while the demand drivers for commercial real estate should remain robust over the next 5 years, the new supply will likely fall behind. That implies tightening vacancy rates and rising rents that bolster the financial performance of real estate assets. And the third major trend that I believe will shape commercial real estate over the next 5 years is increased capital flows into the sector. If you look back over the last 30 years, there has been a steady run-up in commercial real estate investment activity. I remember back in 2009, during the financial crisis, how everyone thought that the record sales activity of 2007 would never be surpassed. And now I look back and see that the record deal count of 2007 was exceeded in 2014, and we've done more deals than in 2007 every year since. In fact, there were twice as many transactions in 2021 as there were in that record year of 2007. As far as dollar volume goes, on an inflation-adjusted basis, the record dollar volume of 2007 was surpassed in 2019, and the sales volume in 2021 was 37% higher than in 2007, again on an inflation-adjusted basis. The combination of increased commercial real estate data availability, professional management, lending liquidity, investor sophistication, and the emergence of broad-based syndication have all combined to make commercial real estate a more mainstream investment option. And that trend will likely continue, spurred once again by demographics. We're on the leading edge of the great wealth transfer. Over the next 20 years, aging baby boomers and the silent generation will transfer an estimated $84 trillion to younger generations. And the transfer of all that money, including a lot of real estate, will likely spark additional capital flows into commercial real estate investment. So while I may not have detailed insights into how the policies of the newly elected administration will impact the commercial real estate market in 2025, I can say that the underlying drivers supporting commercial real estate performance and the flow of capital into the sector over the next 5 years should be quite strong. And at the end of the day, that's a key perspective for investors who should always keep their eyes on the horizon.